Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here as we dive into the latest action in the markets on this final trading stretch of 2025. Today, we've got a packed lineup with some critical insights for long-term investors like you, while also touching on short-term vibes and what's brewing for 2026. Let's break it all down with the key moves, trends, and themes that matter most to your wealth-building journey. First up, let's check the pulse of the major indexes. It was a slightly softer day on Wall Street as we close out the year. The S&P 500 slipped a tad, down about 0.14%, while the Nasdaq followed suit with a 0.24% dip, reflecting some pressure in the tech space. The Dow Jones also edged lower by 0.20%, and the Russell 2000 took a bit of a harder hit, dropping 0.76%. Now, while these daily moves might seem like a hiccup, remember, for us long-term players, it's all about the bigger picture. 2025 has been a strong year overall, and these pullbacks could just be healthy profit-taking before the next leg up. On the winner's side today, we saw some solid action among large caps. Newmont Corporation led the charge in the materials space with a nice gain, riding the wave of precious metals strength. Over in financials, Itaú Unibanco from Brazil caught attention with a decent bump, while energy names like Petrobras and Canadian Natural Resources also flexed some muscle. These moves hint at a rotation into value and commodity plays, which could be a theme to watch if growth stocks cool off in the near term. For your long-term portfolio, these sectors might offer some diversification if you're heavy on tech. Flipping to the other side, tech took a breather today among the large-cap losers. Palantir and Shopify saw some selling pressure, alongside Arista Networks and KLA Corporation. Even biotech names like Gilead and Vertex weren't spared. This softness in tech isn't a shock given the massive runs we've seen in 2025, but it's a reminder to keep an eye on valuations. If you're holding these names, don't panic. Long-term trends in AI and innovation still look solid, but short-term volatility might open buying opportunities if you've got dry powder. Speaking of big names, let's talk market movers. Nvidia and Tesla were among the most active today, though both saw minor dips. Intel, on the other hand, bucked the tech trend with a nice uptick, showing some resilience. Apple also held steady, despite the broader sector weakness. These heavyweights often set the tone for the market, so their moves are worth watching. For us long-term investors, these names are core to many portfolios. Think about rebalancing if one dominates your holdings too much. Diving deeper into volume, Nvidia and Tesla again topped the most active list, showing just how much investor attention they command. Intel also saw heavy trading, alongside some smaller names like NIO in the EV space. High volume often signals sentiment shifts, so while we're not day traders, it's a heads-up on where the market's focus is right now. Could be a clue for where capital flows next in 2026. Now, let's zoom out to the broader economic landscape. The Fed minutes released today revealed a split among officials on the December rate cut, with some hesitant about further easing due to fears of entrenched inflation. Most still expect cuts if inflation cools as projected, but the debate signals caution. For us long-term folks, this means interest rate sensitivity in your portfolio, think bonds or rate-sensitive sectors like real estate, needs a close watch. Short-term, markets might wobble on Fed uncertainty, but a dovish tilt could support equities over the next year if executed well. Sticking with the macro view, there's a lot of chatter about 2026 outlooks for the S&P 500. Some analysts are bullish, targeting levels as high as 8,300, banking on AI-driven earnings and economic resilience. Others warn of overvaluation, with historical metrics flashing caution and potential corrections on the horizon. My take? As long-term investors, don't get swayed by every prediction. Focus on quality companies with strong fundamentals. Whether the index hits new highs or pulls back, your portfolio's durability matters most. Over in the Nasdaq space, tech weakness was evident today, and there's growing talk about whether the AI hype can sustain into 2026. Experts are pointing to continued growth in the theme, but caution against bubble-like valuations in some chip stocks. For us, this is a reminder that while innovation drives markets, diversification is key. If you're overweight in tech, Maybe look at rotating some gains into undervalued sectors as a hedge for the medium term. Looking at the past week's top performers among large caps, Coupang and Micron Technology stood out with strong gains, showing momentum in e-commerce and semiconductors. Intel and eBay also made the list, reflecting pockets of strength in tech and consumer plays. These short-term winners can sometimes signal longer-term trends, so keep an eye on whether their fundamentals back up the price action for potential additions to your core holdings. On the flip side, the past week saw some notable laggards. Tesla took a hit alongside Rocket Lab and Palantir, reflecting profit-taking or specific headwinds. Gold mining stocks like Gold Fields and Agnico Eagle also slipped, likely tied to commodity price swings. While these dips sting in the short term, they can be entry points for long-term investors if the underlying story remains intact. Do your homework here. Sector-wise, over the past week, basic materials led the pack with a solid gain, likely fueled by metals strength. Industrials and technology also showed some resilience despite today's softness. For your long-term strategy, materials could be a play if inflation fears persist, offering a hedge against rising costs. Keep these sector rotations on your radar as they often signal broader economic shifts. On the underperforming end, healthcare and energy lagged over the week, with healthcare seeing the steepest decline. These sectors can be cyclical, so while short-term weakness might worry some, it could spell opportunity for us long-term thinkers. Healthcare especially often rebounds with demographic tailwinds, something to consider as you build out your 2026 and beyond allocations. Turning to earnings, this week's calendar is light as we're in the holiday slowdown, but a few names are still on deck. Companies like SolarWinds Holdings are reporting, though they're not household names for most of us. Last week, we saw some reports from smaller players like Limoneira and Quanterix, but no major surprises to shake the market. For long-term investors, earnings season is where you validate your thesis on a company. Keep an eye out for upcoming big reports in early 2026 to gauge health across sectors.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.